I thought what was interesting is the lack of concern about inflation. That's been consistent over the last few weeks. The Fed does not see a big inflationary threat right here. In fact, last week we saw CPI come in under expectations. And so, yes, growth is good, but inflation's not accelerating. And I think that's a really important point. And to the extent the minutes highlighted that, they're not concerned about inflation right here.
If they're not concerned about inflation, why are we looking at a December hike priced in, David?
Because the economy is doing exceptionally well. We're at full employment, and there are some signs that inflation could be out there. They're not out there today, but the Fed wants to, at a minimum, stay with the curve, maybe even a little bit ahead of the curve. It absolutely makes sense for the Fed to try to normalize interest rates with the economy doing as well as it is.
Steve, same question to you.
Yeah, can I just say, I think that the optimism on growth is right, but the implication there is when growth moderates, which is part of their outlook, is we're going to see some moderation in growth, whether that's due to trade, whether that's due to fiscal policy rolling off, then it's going to be a lot less clear that you need to hike rates in that environment. So yes, December makes sense given the good growth environment, but given muted inflation risks, if and when growth moderates, it's not clear that they need to keep hiking at that point.
Steve, jump in as you wish here, but one question I have for you is how much does the idea, unspoken in the notes, unspoken in the commentary, how much does the idea that the Fed wants to get back to a place where they have some dry powder to deploy in case they need it? In other words, you can't cut rates, well, you can go below zero, but that they'd like to get rates higher so that when they need to be able to cut interest rates, they've got some cushion that will allow them to do that.
You're right, Tyler. That is not spoken, although some Fed officials have said things along those lines. I think when you talk about the word normalization, there's a lot of different dimensions to it, and I think that's one of them. I think the idea that there should be a real price to money is something that animates Fed thinking, that being at zero or negative, that is the nominal interest rate minus inflation, is an abnormal state to be in, that having a big balance sheet is an abnormal state to be in. So normalization has a lot of components, and you're absolutely right that that's one of them. I wouldn't say, as one of the previous guests said there, that there's not concern about inflation. In fact, it is the concern over inflation that animates Fed policy right now. It animates the drive and the desire to get to a normal rate so as not to stoke it. There is not concern with current inflation, I would say. But there's just that specific note in there which they say that they need to raise rates above the long run rate to reduce the risk of overshooting the 2% inflation target. And for those who have the question of why they're doing what they're doing and why they think they're going where they're going, I think that's the reason.